Is the US economy really on the brink of a huge collapse because Japan is pulling away from the dollar? Today we're going to talk about what's happening in the world of finance and how Japan's decisions about US Treasury bonds could shake things up for America. Have you ever wondered what it means when a big country starts to rethink its investments? In this video, I'll share what these changes could mean for the US and how they might affect the global economy too. Welcome to the channel, and let's talk about something that's been stirring up quite a buzz lately: the link between foreign investments in US Treasury Securities and the US economy's stability. It's a bit of a tightrope walk these days. Countries like Japan are rethinking their financial game plans, and this could shake things up for the US dollar and its role on the world stage. With Japan being the top international holder of US government bonds, any shift in their strategy could mean big changes in economic power. Risks of investing in US Treasuries. Interest rate worries. Investing in US Treasuries isn't always easy. One big worry is interest rate changes. When US rates go up, the value of these bonds usually goes down, which can lead to losses. This is especially tough when rates rise because of inflation. The Federal Reserve has been raising rates to tackle inflation, which makes things tricky for investors holding US debt. As rates climb, the risk goes up, and investors might need to change their plans. Currency concerns. Then there's the currency risk. If the US dollar gets weaker, these investments lose value when converted to other currencies. For countries like Japan, where the yen can change a lot, a falling dollar means their US treasuries might be worth less, leading to losses when they bring the money back home. Inflation worries. Inflation is another issue. It can eat away at the returns on US treasuries. If inflation is higher than the bond yields, the real returns shrink, reducing the buying power of foreign reserves. For example, if inflation is 5% but yields are only 3%, investors actually lose money in real terms. This is a big concern for countries like Japan that rely on stable reserves for economic security. Political and global issues. Political drama adds to the mix. Things like US debt ceiling debates can shake market confidence. During uncertain political times, foreign investors might shy away from US bonds, worrying about a possible default. This can unsettle markets and make investors rethink their strategies. Countries with large holdings like Japan have to be careful navigating these challenges. Liquidity problems. Liquidity risks are another problem. In financial crises, countries might need to sell treasuries quickly at lower prices, which can hurt market values. Remember the 2008 crisis? Many investors had to sell assets for less than they were worth. This risk is significant for countries like Japan with lots of US debt. Concentration risks. Lastly, there's concentration risk. Countries like China and Japan with big US Treasury holdings could face losses if the US financial system has issues or the dollar drops. Getting out of these investments without losing money would be tough. Japan's holdings peaked at $1.87 trillion in March 2024, but dropped by May, showing the risks of having too much invested in US debt. Japan's investment scene. Now let's talk about Japan's big role in US government bonds. As of September 2024, they're the top international investor, showing off their strategic financial moves. Back in March 2024, Japan held about $1.87 trillion in US treasuries. By May, that number dropped to around $1.128 trillion after selling $59.5 billion. This shift, with a $22 billion decrease in May, following a $37.5 billion drop in April, highlights how Japan is rethinking its investment game due to economic pressures. Looking back, Japan's journey with US Treasury Securities has been quite a ride since post-World War II. Initially, they focused on rebuilding their economy, But as things picked up in the 60s and 70s, they started stacking up US assets. By the 80s, Japan was one of the biggest foreign holders of US debt, thanks to their trade surpluses with the US. Even with some economic hiccups lately, Japan's love for US treasuries stays strong. They're seen as a safe bet. Since the 2008 crisis, Japan's been a top holder, often neck and neck with China. But now, with some unrealized losses, big players like Norinchukin Bank are shifting from US and European bonds to other investments. Japan's big move, shaking up the financial world. Japan is cutting back on US treasuries, and this could really shake things up for the US dollar and treasury yields. If they sell a lot, yields might rise, because when there's a big sell-off, bond prices usually drop. Higher yields make it more expensive for the US to manage its debt, and that might make the dollar less popular around the world. If Japan sells off a bunch of treasuries, it could quickly push yields up, causing ripples throughout the financial system. This is all part of a bigger trend called de-dollarization, where countries are rethinking how much they rely on the US dollar. Geopolitical issues like US sanctions are pushing countries to find other options. More countries are using currencies like the Chinese yuan in trade deals, showing a shift away from US financial dominance. Why the change? With US interest rates rising to fight inflation, holding debt in dollars is getting pricier for foreign investors. They're looking for cheaper options and rethinking their investments. A strong dollar makes it hard to hold large reserves, so countries like Japan are diversifying their investments to reduce risks tied to US treasuries. What does this mean for the US? Japan pulling back on treasuries could cause more than just a bump in bond prices and yields. It might lead to market jitters, causing ups and downs in stocks and currencies. This instability could force investors to rethink their strategies. Rising treasury yields mean higher borrowing costs for the US government, making it more expensive to manage national debt. If Japan's sell-off keeps yields high, it might squeeze federal budgets, affecting public services and investments, posing risks to the economy. Global money flow shifts. Japan's decision to pull back on US treasuries could really mix things up with global money flows. As investors from around the world start rethinking their US treasury investments, we might see cash moving to different markets. This could change currency values and impact how central banks operate, showing just how connected the global economy really is. Japan's sell-off might also stir things up in Europe. If US yields go up, investors might look at European bonds, which would affect yields there too. This could make it tricky for European governments to keep things stable and keep investors happy. The jitters from the US could easily spill over into Europe, causing ups and downs in European stocks and bonds. Since the global financial system is super interconnected, changes in one place can have big effects elsewhere, making things challenging for EU policymakers. A shaky euro, due to nervousness in EU markets, could mess with trade balances and inflation, especially if the US dollar gets stronger. Countries in Europe that rely heavily on exports might face some economic stability issues. Keeping investors confident in EU bonds is really important. Japan stepping back from US treasuries might make investors rethink the risks in Europe, especially with rising yields and market ups and downs. Politics and future trade ties. The upcoming US presidential election is going to play a big role in politics and trade relations. What the candidates think about trade could impact how the US and Japan get along. A more closed-off approach might cause tensions, while working together, especially if Vice President Harris takes charge, could strengthen ties. This could help stabilize financial relationships and ease some of the risks that come with Japan's divestment. What do you think will happen if Japan keeps moving away from US treasuries? Share your thoughts in the comments. And that's it for today. If you enjoyed this, hit the like button and subscribe. Stay tuned for more and catch you next time.